The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Grant Cardone, the entrepreneur, best-selling author, real estate mogul, and global sales trainer whose 10X philosophy has influenced millions around the world. You built a $4 billion real estate portfolio, created a massive online education empire, and reshaped how people think about money, ambition, and financial freedom. Recently, you shocked your industry by going publicly all in on Bitcoin, arguing that the future of wealth will be built on hard digital assets, decentralized systems, and the collapse of the old financial order. You've embraced Bitcoin not just as a hedge, but as a core long-term store of value, and you've begun teaching millions of followers why it's becoming indispensable for entrepreneurs, investors, and families around the world. Today, I want to go deep, not on your past, but into the new Grant Cardone mindset, Bitcoin, digital assets, de-dollarization, global instability, and why you believe the middle class will get wiped out unless they adapt fast. Grant, welcome back to London Real.
Good to see you, man. Always good to be with you and London Real and the red tie and the red puffy. I mean, you got that thing on lock, bro. I mean, they should give you a trademark for that look right there, the pinstripes.
Thank you, man.
Hey, I've added $1 billion too since I talked to you last, so I don't want to take that haircut. I don't want to start this interview with fake news. So we're at $5.2 billion.
Wow. That's incredible. I remember when you were sub-billion.
Let me tell you, let me just add one other thing so you're up to date with me. Since I saw you last, because I think success is very important and people should share what they're doing. You can't just let you believe that you're going to do something and the world's going to know what you did. Since I left, we built a consulting company out like an Ernst Young for medium-sized businesses, a 10X health system that's only 3.5 years old, and we continue to expand our education business out. Those companies are worth probably $4 or $5 billion today. Maybe could be as much as 8 with 10X health system.
Wow.
And I was just with you, dude. I was just with you. So all I'm saying to Americans is go do big things, or to all people, not just Americans, but go do big things and make sure you let people know that you're doing big things. Otherwise, nobody's going to know what the hell you're doing.
Yeah, I like that. You got to talk about your success and celebrate it and communicate it. I remember when you were sub-billion on assets managed. I remember that. Yeah. And I think you first came here in 2017 when you first sat down in my studio. And I remember the night before thinking, why the hell am I having this guy on my show? And then you came in and you were as real as it gets, Grant. You dropped right into some of your biggest struggles. You were honest, you were real. And man, I've learned a ton from you over the years, for sure. And so, man, lots to talk about today. I also want to hear about the future. I had no idea your other companies were, worth billions as well. I'd love to talk about that too. But look, let's start off with the blockchain and digital assets. I mean, this is new and it's exciting to watch. And I saw your interview with Michael Saylor, and people should all watch that. We had Michael on back in 21 and 22, and he's obviously considered an OG in this industry. But we've been here on the blockchain for 4 years. What took you so long, Grant?
Well, I've owned Bitcoin since 2013.
Okay, there we go.
You and I just never talked about it.
That's true. So
I was building out my real estate portfolio, and about 7 years ago, we started raising money, allowing other people to invest with us in the real estate. But every once in a while, I'd go dabble in this thing called Bitcoin. I was given Bitcoin in 2013 for a speaking gig. I was given 115 pieces. 2 executives in the company said that we didn't want to take it. And somebody wanted me to speak in Vegas. and they said, we'll give you Bitcoin. We don't have money. And they both said no. And I overheard it. And I'm like, hey guys, the fact that we don't understand it, that is not a reason to say no to it. Which I think is a very important lesson in life, just because you don't understand something. Some of the things that I have not understood have been the best things for me in life. And the old grumpy man always says no first, and I don't want to be that guy. So I'm like, hey guys, let's investigate. The man's offering us work. And this was 2013. I needed the work. It wasn't like I'm I still need the work today, by the way. For all you guys out there, I'm still hustling, and probably harder than 2013. But I said, look, he's offering us work. Two, he's offering me my purpose line, which is to help people. He's given me a forum where I can go speak to an audience of people where I can help them. I have expertise in this space. Forget what he's paying us or how he's paying us. Say yes to the guy, and let's figure out how to work the financial piece out. There's got to be a financial piece. And then they're like, yeah, we're going to give you 115 Bitcoin. And I'm like, man, I don't even know. I don't know what that is. I didn't blame it on them though. Which I think is really, really important for people to quit saying no to things they don't understand. I said, look, what is it called? He's like, it's BTC. And I said, is BTC, true story, is BTC in any category of STDs? And he said, no, dude. That's how little I knew about it, right? So I said, look, man, this is what I'll do. You got to show me where to put it, where to keep it. I'll take it. I need to sell off enough to pay for my flight over there and back. And then, I'll come do your gig. Well, I still have that Bitcoin today.
Wow. And you didn't lose it or misplace it?
No, dude, I didn't lose it, misplace it. I don't lose shit.
Wow.
I let my wife and kids lose shit. I don't lose shit. So
that's impressive. That you kept it and that you took it in 13.
Yeah. Yeah. And then I've been adding. I added at 16,000. I added at 30. I bought it at 60. Watch it go back down to 15. But it was little pieces, right? And then my brother sat down with me and he's like, hey, what's your cash flow from your real estate now? Because by this time, I've been buying real estate since I was 28 years old. And I said, Gary, my cash flow from the real estate's like $1.6 million a month. Every month, dude. Like, this has been going on for clockwork for 12 years. And he's like, go to this website. I think it's called Hold Something. It does an analysis of if you would have done this or that.
Right.
And so I looked at my cash flow. If I'd have put my cash flow, which I didn't need, by the way, I've never stopped working. I have all this passive income, but I never stopped working, as you know, to earn more income. And I put it in there, dude, I would be worth like $42 billion. And then what we did was I started experimenting with taking the real estate, part of the cash flow from the real estate, and I started adding Bitcoin a little bit at a time. And then January this year, I said, I'm going to go try this on my audience and see how they respond to it. So we did our first real estate Bitcoin deal in January. It was a $88 million transaction, $72 million of real estate, about $16 million of Bitcoin. And then we allowed people to invest with us in that, where we basically fused the real estate. We paid cash for the real estate. We paid cash for the Bitcoin.
Okay.
And we put the two together in a company, in an LLC, limited liability corporation. And then we put the fundraising around it so that the 100 or 200 investors that came in, they all now own a equal piece or their piece of this piece of real estate, the cash flows, and this Bitcoin that we now own with no debt.
Wow.
And we just finished our fifth one. We just finished our fifth one last week. It was $235 million of real estate and $100 million of Bitcoin.
Okay. And so you have those two assets in the LLC, and then you also take some of the cash flow from the real estate and buy more BTC?
Yeah, and then every month, well, the first deal we did, it went, and I'll send you the pictures of it so you can insert it.
Please.
It was cash flowing $3.6 million a year, 300 grand a month. So every month we buy $300,000 of Bitcoin. So let's say 2 to 3 or 4 Bitcoin a month get added. So that account has, since January, I think we have 175 Bitcoin in that real estate investment, and we have the real estate. So the real estate's hopefully going up. The rents are climbing, getting better. We're doing a better job of managing the property, lowering expenses, increasing income. And the Bitcoin, they're working together. So we're not sure really which one's hedging which one.
Okay.
They're hedging each other, right? Because one's very volatile, as you know, and the other one's very stable. But what we didn't know, Brian, was we didn't know how our audience would respond to it. I knew I would do it.
Yeah.
And I didn't want to go. The concept is we're going to build this portfolio. We now have the largest real estate Bitcoin portfolio in the world.
Wow.
Short of Japan, the Planet,
Meta Planet. Yeah, I know Dylan Claire, who runs.
But they've ducked off all their hotels except for one, which I think is a mistake.
Okay.
Because I don't want to be a Bitcoin only business.
You don't want to be a treasury, a digital treasury, basically, a DAT. We'll talk about those. I know you have some opinions on that. So you mix it. You have two assets, real estate and the Bitcoin, and you think they work well together because one's super volatile and one's much less volatile. And you can use the cash flow of the real estate to buy Bitcoin. And when you went to launch this vehicle in January, were you worried or had you already done a few tests and did you know that it was going to be oversubscribed?
Yeah, no, I was a bit concerned about because look, I've been pitching cash flow. You know, I got sweatshirts with cash flow on them. I got hats with cash flow on them. You know, there's a song made about me called the cash flow guy. So, what we're doing here is we're taking the cash flow from the real estate every month, the 300 grand in the Melbourne case, which is that name of that property. And we convert that to Bitcoin. We don't distribute cash flow to the investor anymore. So I had to go to my investor and say, hey guys, this investment is for those of you who no longer need more cash flow. Okay. So for instance, I don't need more cash flow. At some point in life, hopefully everybody watching, you're going to get passive income. And I'm not saying people should go do this as their first deal, but at some point in life, you want to get enough passive income that it pays all your bills and their surplus. So my strategy, my wealth strategy is I earn income, I invest all of it. I spend none of this earned income. You and I have talked about this. Yeah. I earn the income, I use the income to buy assets. So I have no money to live off of, and I only live off the passive income of this investment over here. So that squeezes down the number of things I can invest in. Like if I went and bought Bitcoin, it doesn't cash flow. I can't do that in the beginning because I need to live off of something, which is my passive income. So in this case, what we're doing is we're just squeezing the cash flow from the real estate. Our tenants are basically buying our Bitcoin.
Right.
And then every month we add 3 or 4 pieces in that first piece. Now, in the last deal we did, see, I didn't know if my audience was going to respond to it, my investor base. We had money come in 3 times faster. The check size was almost 3 times bigger.
Wow.
And the age group changed. The demographic of the investors' age. What do you think it did? Up or down?
Down by 10 years.
Okay, so we should allow your audience to post. Do you think it went down by how many years or did it go up? And then come back to this and I'll answer it later in the interview once they have enough time to load it up. You want to do that?
Yeah, I like that. Let's do that. All right, let's do that. All right, and put your responses below. Yeah, okay.
So it was a very successful project. We did our first one. We're on our 5th one now. Okay. Now the 5th deal that we did, because now I had confidence. The first deal we did 85% real estate, 15% Bitcoin. Okay. I went and talked to Mike Saylor about this back in January. I was telling Mike what I wanted to do. He's like, look, man, you need to go public. You have a very trusted audience. You need to add Bitcoin to your real estate and you need to be aggressive with it. And you need to build this into a big real estate Bitcoin treasury company is what he called it. You need to do what I'm doing. I said, but I'm not public. He literally said, that's your fucking problem. I'm telling you how to get rich.
Okay, and you met him in January, and how did you meet him, and why did you listen to him? Yeah. How did you meet him, and why did you listen to him?
Well, my brother got the meeting.
Okay.
My brother said, hey, I'm coming down to Miami. I'm going to meet with Mike Saylor. You want to come with me?
Okay.
I said, yeah. So Gary had been trying to orange peel me. We're in spaces, 2 or 3 times a week. This is my twin brother, and he's extremely orange pilled. Like,
He's been in crypto for 5 or 10 years.
I don't know how many years he's been in it, but he's definitely he's down the hole. He's down the hole, bro.
Yeah, I met him at the Consensus Conference in Austin years ago, so I knew he was going down that track. But okay, so he sets up the meeting with Saylor. Did Saylor know who you were? Because you guys are both Florida guys.
Mike, it shocked me, dude. He's like, look, I know all about you. I know your 10X thing. I know your brand. I know your conferences. I see you online.
No way.
You get your ads. I was like,
can I quote Grant Cardone, who once said, if you don't know me, you can't do business with me.
That's right. If you don't know me, you can't flow me.
Right. And so Saylor, if he didn't know you, he probably wouldn't have flowed you with the knowledge.
Yeah, I don't know. I mean, I doubt it.
Right. Okay.
So
he knew you, and he had thought about it, and he thought you should go all in on Bitcoin.
The guy sat down with me. I literally sit down across from him in the house that he lives in today. Was the first house that I looked at when I moved to Miami. I almost bought that house. I could have bought it for $12 million.
Okay. Wow.
And so I'm sitting across from him. I'm like, this is so like serendipitous. I think that would be the right word, that I'm in this guy's house. And look, I didn't know if this would work. So I'm like, Mike, I have an idea that I would take the real estate, add the Bitcoin. He's like, get rid of the real estate, dude. Just do the Bitcoin. I said, Mike, no offense, man, but I have $5 billion of real estate. I'm not going to just throw my career away.
Yeah.
Any more than you threw away your software business. Okay. I want to build off the real estate. I don't want to be a Bitcoin guy. Now, this is before all the treasuries popped up.
Okay.
Like literally between the meeting that I had with Mike Saylor and today, 190 treasury companies popped up.
Yeah.
I believe all but maybe 4 or 5 of them will fail.
Yeah, you might be right.
And I told him at that meeting, I do not want to be that. Okay. I don't believe in that. Okay. I don't believe in, I'm a public company. I'm going to raise money. I'm going to buy Bitcoin or Ethereum or Solana or whatever you're buying. That's going to go up. And then I'm going to borrow more money. Like, that's not what I do, dude. I'm a real estate guy.
Yeah. I mean, you might as well use your IP and your specialization anyways, right?
Exactly right. And I can't undo this story, nor would I want to, because I believe real estate is one of the great investment asset classes in the world and will continue to be for thousands of years.
Okay.
Even though it has problems.
Right.
So Mike was like, man, I'm telling you, I said, I think I'm going to go 85-15. He's like, that's a pussy fund. Literally, that's what he called it. That's a pussy fund.
But we all have to dip our toe in somewhere. So that's what you did.
So I'm like, well, bro, look, like $15 million of Bitcoin on an $85 million purchase. It might be a pussy fund to you, but like, he's like, I'm telling you, do like at least 50-50. And look, raising money is already difficult. That means I would have to raise $72 million for the real estate, $72 million for the Bitcoin. I'm like, I don't think I could do it because I'd never done it. And so we tiptoed in our first deal. Our second deal, we did $15 million of cash to buy the real estate. We leveraged the real estate and we did $15 million of Bitcoin. Third deal and fourth deal, the same thing. The fifth deal, and this is this year, the fifth deal we did $235 million purchase from Blackstone. I bought it out of bankruptcy. I paid cash for it. And we added $100 million of Bitcoin.
Okay.
That's a monster deal. Okay. That deal's got 900 pieces of Bitcoin on it. That deal, that 335 million could be worth in the next 5 years, $1.2 billion or $1.3 billion.
Okay.
And our audience loves it. My investor base loves this asset class. The goal now is to take this public, continue to build these out and take them public.
Take each individual deal public?
No, we'll bring them together.
Okay.
We'll dissolve the membership partnerships that we have. We'll issue shares back to the investors. They'll be ground floor investors in this opportunity. So they'll come in at a price before the IPO, for lack of better words.
Okay.
It'll be great for the investors.
You're like a DAT, but you own digital assets and real assets.
I'm like a DAT that is got real assets.
Okay. But you're training
And a real business, by the way, and accounts receivables and payables. And that's the problem. Okay. Like if you don't have a real business, or if the business is all built around Bitcoin or, digital, what happens if that digital fails or goes through a winter or two winters? I want a real use asset here. I can't live in my Bitcoin, no matter how much somebody loves Bitcoin. And I know some of the Bitcoiners out there are like, Bitcoin's going to solve every problem in the world. Bro, I still need food. I still need water. I still need a place to sleep. I still need transportation. Bitcoin cannot solve every problem in the world. It can't be the only asset class.
Okay. So,
but more importantly, yeah.
When you take this public, this won't be the education business or anything else. This will strictly be your real estate and Bitcoin assets. That will go public.
That's right.
Okay. Is that happening? Because I heard you talking to Michael, and we know it's a pain in the butt to go public. Even Michael recalls that. But also Michael said you just do it, right?
Michael told me, I went back to him, I guess, 3 months ago. I've had 5 meetings with him since then. And I said, Michael, man, I'm having trouble with the public thing, the IPO thing, bro. It's like, this is terrible. I'm looking at a reverse merger. I looked at a SPAC. I don't want to do the SPAC thing because it's very diluted to the investors. The reverse thing comes with hair and problem. He's like, it's a rite of passage. Do it the right way. You have to go kneel in front of the king, take a knee, kiss the ring. It's a rite of passage. Do it the hard way. I said, fuck, I can't do it, bro. Like, I cannot do this with the banks. And he's like, look, you got to pay the price. Everybody has to go through this. But you see, he's been public since he was like 33 years old.
Yeah.
I'm 67, bro. And I mean, other than, I don't have a stock symbol that people are not telling me what I'm worth based on the price of my stock.
Do you want it?
Well, I want it if it's good. I want it if it's good for me and the investors. I don't want it if it's just, I don't want the DAT thing. And by the way, I could have done the DAT thing and picked up a bunch of dough, just like I could have done NFTs and I could have made a bunch of money for myself. I could go do a meme coin and pick up probably $100 million. I'm not going to do that though.
Yeah, we had opportunities to do that too, and we passed. Yeah, it's not like the wrong thing to do.
Dude.
So, but public means that you got a whole new source of liquidity, a bunch of people that can buy your stuff. So your val probably will go up, but then you get all the headaches of being a public company.
Yeah, that's fine. But I'm a creator, Okay. The problem with most of these DATs today is there's no product, there's no service, there's no customers, and the biggest mistake is there's no creator.
Yeah.
Just because you're a capitalist doesn't mean you're an entrepreneur. And I think a lot of people confuse those two words and think that just because you put a vehicle together where you can raise money from Wall Street does not mean you can run a business. And we're seeing this with a number of these DATs, more than, I mean, look at Naka, David Bailey over at Naka. Yeah. I don't know David, but that didn't work.
Yeah, it's been a bit of a mess. Look, Michael was obviously the OG. He was in earlier than anybody else, and then he innovated on the back of that. So when you spoke to him, he talked about everything he did in the convertible market, and now his concept of digital credit. I mean, honestly, I've been talking to Michael for 5 years now, and every 6 months I listen to him, and I feel like he's like got another black belt in Bitcoin, because Michael's brain, you know what he's like, and you called him the greatest salesman on the planet. He's also that as well. But 100%. He's always looking at it differently. It's digital capital, it's digital energy, it's digital credit. And the way his mind goes, he can create things that no one ever saw coming. And so he's innovating. He's the entrepreneur you're talking about, and he's early. So he's bringing real value. If he can really pull off this, 1 year instrument that yields 10.5%, I mean, that's insane. That's the greatest product ever created.
When I was with him, he was sitting right here.
Yeah, I saw you guys.
And we did about 2 hours and 15 minutes. And as you know, when you're across from somebody, the beginning part of the interview is typically the social veneer. It's the, the exterior of the guy. It hadn't been breached yet.
Right.
You really haven't. You don't really have him yet. Somewhere about the hour mark, we started talking about the debt instruments that he's creating, and I'm telling you, bro, the color of his eyes changed. Like I try to be present with somebody, you know, and I noticed, I'm looking for the change in the guy. And I noticed about an hour when he started talking about these debt instruments. I'm like, this guy, pupils dilated, colors changed. Bro, I went deep into this guy's psyche. And he believes he is going to build a $5 or $10 trillion business. It won't even be what we know today, MSTR like. And this wasn't even on the board, which is crazy. Wasn't even on the board, not board confused with this company, but in his mind, in his masterminding a year ago, they weren't thinking about doing debt instruments.
Yeah. Yeah, I listened to your whole dialogue and I know a bit of his history. Well, look, now you know why I love doing this stuff, because when you're in the right room with the right person at the right moment, I know it sounds weird to anybody who hasn't done it. Like, you literally, the two of you become this fucking ball of energy and you're getting to these crazy levels and you really do see this energy inside the person.
Yeah.
And if done really well, we can feel it when we're watching. And I could see he was in a zone and you were in the zone and it was great.
Well, it did something to me too, dude.
Yeah.
So when that happened for him, what happened for me, if you're present as the interviewer, and it's very difficult to be present and do the interview.
Yeah.
You know, you're going in with an agenda, you got a list of questions, you do want to be somewhat prepared, but by the time the interview takes place, it's like, okay, you got to throw all that away and let whatever happen. Yeah. And what happened for me was like, oh shit, Grant, you're thinking about this wrong too, dude. And at that moment, I was like, for the first time in my life, okay, and I've never said this publicly, $1 trillion became a real target for me.
No way.
Yeah.
Because you could see that Michael was going to do it and you felt that same energy of, yes, I'm going to do it too. Why, Grant?
Well, because the debt market, like in real estate's one of the largest asset classes on planet Earth. It's about $400 trillion.
Right.
And it all requires debt. People are not paying cash for their real estate. Shopping centers, hotels, plots of land. Most of that is funded by a lender, Fannie Mae, Freddie Mac, or a bank, or CMBS loan, or a local bank, or whatever, right? So I was like, oh, you're just looking at the real estate, Grant. You need to look at the debt part of this thing.
Right.
Now, when we started doing it, when I started understanding the power of Bitcoin, its liquidity is very powerful. And that power is also, though, a weakness for people. I think you guys call them the lettuce hands.
Or the paper hands. Yeah.
Whatever. Y'all have all these terms, right?
Yeah.
But you see, liquidity has always been something I didn't want, because I don't want to look at this. I don't want to see this.
Yeah.
I want to make a decision and then I want to wait. I don't care if I got to wait 7 years, 10 years, 15. It doesn't really matter to me. I just want to 10x my money. And so I want to buy it. That's why I love real estate so much, because it's illiquid. Now, when I combine the Bitcoin asset with it, and I merge the two together, I take the liquidity out of my mind with the Bitcoin, because it's secured with something illiquid. I don't want to break the two up. And so but I do have the liquidity from a debt standpoint. Not yet, not today, but 2 or 3 years from now, I believe that I'm gonna be able to put enough of these together that I'm gonna be able to go to a major institution or a big player and say, I just fused together $5 billion of real estate with $5 billion of Bitcoin. I want debt against the two combined, not them separate. And this would solve a lot of problems for a lot of people, including banks, because real estate, if that piece of real estate that I just bought from Blackstone, it's been in the bankruptcy courts for 2 years. real estate is very illiquid. You can't just say, I'm selling it, I want to get rid of it. I got a problem, I want to get rid of it. You're talking about years to get rid of it, sometimes 6 or 8 or 9 months. If you want to get rid of it right away, you're going to discount the price a bunch. But if I had the Bitcoin on there, okay, and let's say I needed CapEx. Let's say I had a problem. I couldn't finish something. I need a couple $1 million, but the real estate doesn't have it. We're going through tough times. If I had the Bitcoin there liquid, I could borrow against the Bitcoin or cash out the Bitcoin, do my CapEx, fix the building, and not lose it.
Okay.
You know, Donald Trump, your boyfriend, Donald Trump, he lost the Plaza Hotel.
Yeah.
I don't know if you know that.
I didn't know he lost it. I remember when he bought it, and then I remember
He lost it, dude. He lost it because of too much debt.
Oh, wow.
And had he had just 10% of that purchase, this is pre-Bitcoin, but had he had 10% of that purchase funded in Bitcoin, he wouldn't have lost that property.
Okay. All right. So that's the light bulb moment you had when you were talking.
Yeah, the light bulb moment was, man, you know, like in England, I don't know if you guys have to do this with loans less than 20% down on houses. In America, we have to put PMI on it. You're forced to buy an insurance to protect the mortgage.
Okay.
It costs about 2% a month of the loan. So on 400 grand, it's going to cost you about $8,000 a year. If that was Bitcoin rather than insurance, you wouldn't lose homes in America.
Okay.
The average home's kept 8 years. So if you had 2 4-year cycles where every month you're buying $400, you're paying for $400 of Bitcoin or Satoshis rather than insurance, which is worthless except to the insurance company. You would not have a lot of problems in this country that we have with people going insolvent.
Okay. So that was the moment you had. Did you tell Michael what you were thinking, or did you just kind of?
No, I was just interrupting him and listening.
Yeah. You were asking great questions, though. I like how, again, you were just in the flow. You were just like, all right, what is that? What is that? Okay.
Yeah, but he's not used to being interrupted.
No, maybe not. But it was a great interaction because you were asking the questions that everybody was dying for you to ask, because Michael's quite up here when it comes to capital markets.
But he's got his pitch down, dude.
Yeah, that too.
You know, I learned this when I was selling a piece of software when I was, 35 years old. And the gimmick in the software was it wasn't quite ready, like no software is. And so I would show them, I would already have a program kind of built in. And the viewer didn't know, let me play with it, let me add my stuff. So when you're doing an interview, you can't just let somebody do their little rote thing, because you're not going to get down to the truth of the matter. You're going to get their pitch and the way they see it. Their bias is going to be the whole interview, rather than, hey, Mike, hang on a second, I don't understand something. Because that throws a wrench in the interview so that we can actually have a conversation, not just a sales presentation.
Yeah. Also, he can explain it to you and your audience, whereas sometimes he's pitching to people that are deep into it. So what are your plans in the next 12 months then? Are you going to do more of these real estate deals with Bitcoin? Are they going to get more complex? And are you going to continue the public company pursuit?
Yeah, we're definitely going to continue the public company pursuit. I have a meeting after this about a vehicle that might fit for us perfectly. And, we're even looking at tokenizing the real estate.
Okay.
Separately.
Okay.
So it could be a public company, and then inside the public company, the real estate's actually tokenized.
Is anybody doing that in a serious way in the States yet? Okay.
No. I've heard for 4 years, I've heard you need to put your real estate on the blockchain. I'm like, well, why hadn't anybody done that? Oh, somebody did it. The guy in Aspen did it. Why didn't he do a second one?
Yeah.
And my wife even said this to me. She's like, you ask questions that people don't ask. And I'm like, do you have to, don't just accept what people tell you. Like if somebody says, hey, I went to the gas station and I bought great gas there. How many times have you been to that gas station? Once. Well, what does that mean? So this group out of Aspen did one project. Why didn't he do a second project and a third one and a fourth one and a fifth one and a sixth one and a seventh one? If it was successful, you'd repeat it.
Yeah. There's no liquidity there right now.
So there's been 5 of these deals have been tokenized. I'm doing the homework and the due diligence necessary. I'm going to build a massive. I'm going to go from $5 billion to $100 billion. I'm going to grow up. Like I told you before the interview, it's time for me to grow up.
Time for you to grow up. All right. Yeah. Well, I want to get to that for sure. I want to go a little deeper on that. So just to put this stuff to bed, you're going to keep going ahead with Bitcoin. By the way, can you tell us now, how did your investor change when you started putting Bitcoin as digital asset in there?
The age group went up almost 20 years.
Crazy.
The check size tripled.
Okay.
Okay.
From 20 years from like average of 30 to average of 50 or average of 40 to average of 60?
Over 50. Okay. 80% of the people that invested with us, 82% or something, had no Bitcoin. Zero.
Okay. Wow.
None.
You orange pilled them.
Yeah, because what we're doing is providing a vehicle they understand.
Okay, got it.
They understand. Wow. 99. Here's the problem with the Bitcoin community. I had this conversation with Mike.
Okay.
I said, you guys don't know how to talk to regular people anymore.
Probably true.
All I hear about is fucking dollars going to hell. The world's coming to an end. We can't keep borrowing money. I've been hearing this bullshit about we can't borrow money for 67 years. The debt clock, you know the debt clock that everybody talks about?
I remember it, yeah.
I don't know when it was created, but I guarantee it was around when I was born.
Yeah, it used to be in New York City. I think in the 80s, you'd drive by on 6th Avenue and there it was. Yeah.
We have too much debt. We have too much debt. We have too much debt. Dude, this is, no, we don't.
I know.
We're going to have more debt, okay?
I know. For people calling at the end of the dollar and the sky is falling and the market crashing, I agree. I've been hearing that for 30 years, especially on Wall Street, and it ain't going to happen anytime soon. And you tweeted that the other day. You're like, enough, Bitcoiners. This is not going to be over anytime soon, right? It's the wrong way to sell this product.
It's the wrong way to sell it, right? Like I'm not even talking about the Bitcoin. I'm talking about the real estate. Here's the real estate. I bought it out of bankruptcy. We stole the real estate. Okay. The way for this to work, if anybody wants to mimic what I'm doing, is you have to find a piece of real estate that you're buying below replacement costs. This piece of real estate would cost $350 to rebuild it. I paid $230. So I have $120 million. I have a third, whatever the project is. If it was $2 million, I'd have to build it for $3 million. Okay. Whatever the difference between the cost you paid and the cost to build is an opportunity to fill that up with Bitcoin rather than just get a cheaper price. You know, in sales, as a young kid, I was a salesman. You never know what you're learning as you're growing up, but I remember a guy telling me, you lower the price. Bro, lowering the price doesn't make it more valuable. And it definitely doesn't make it the right product. You're going to drive this every day. Okay. You're going to get a price one time. Same thing in real estate, by the way. You're better off paying a higher price and getting a better piece of real estate. Because you can pay a lower price and get garbage. You pay for it once, you keep it forever. So what we did was, I took that analogy and said, why am I just settling for a lower price on the real estate? Because all I can do is sell a piece of real estate later in the future. Why don't I take the lower price opportunity and fill it up with something better right there? So we took the 230, we added $100 million of Bitcoin, 833 pieces, I think is what we bought in that portfolio. No, actually it was almost 900 pieces, added 900 pieces. So now we put the two together. We have real estate and Bitcoin. We're still at replacement costs. We're still cash flow positive. We still get a big tax write-off. People live in the property and we have the opportunity to raise the rents because we brand it. Grant Cardone owns the building now, Cardone Capital. We brand it 10X. We take care of our tenants. We clean up the place, we furnish it, and then we offer our residents in the property the opportunity to be the first investors.
Okay. So you actually orange pilled a bunch of new older investors with your vehicle. I never saw that coming, Grant. That's amazing.
Yeah.
Wow.
Yeah.
Wow.
1,500. We've orange pilled 1,500 people this year into owning Bitcoin. And most of them aren't even like, yeah, good luck on the Bitcoin, dude. Like they're not watching there every day the way you do.
Okay. That's a healthier way of owning Bitcoin.
100%.
Yeah. Okay. A couple other questions about crypto, and then I got a bunch more to ask you. Would you ever consider any other crypto assets? Bitcoin doesn't have a yield. Ethereum does have a yield. I think Solana does have a yield because they're proof of stake. Or are you just going to stick with the one and only?
Well, I won't do anything until I fully understand something. So I don't do anything I don't fully understand. So
at this
and
point,
when I do it, I'll do it on myself first.
Okay. All right. So I shouldn't hold the breath that you're going to go into an Ethereum play anytime soon.
With me, dude, I never want to say no. I don't want to say no to. It's what I said earlier. Why would I say no to something I don't understand? Because I don't understand it. But I'm not going to say yes to anything I don't understand.
Okay.
So, and I don't understand Solana or Ethereum enough or Ripple enough, or I can tell you this, it'll never be gold or silver.
Okay.
Because I understand that gold and silver would not add value to my real estate portfolio, despite the fact that gold is up, 80% this year. I'm still not convinced gold's an investment.
Okay. All right. So the next 2 years involve you doing more of what you're doing, which is continually accumulating huge chunks of real estate, combining it with Bitcoin on certain deals, and then potentially bringing everything public in the next 24 months.
We think the public piece is very, very important for our investors because it provides them with liquidity. Number two, I think I would be the perfect person to run a public company because I believe entrepreneurship and running a company, not only is it about good execution, but it's also about promotion. And I am an expert, self-acknowledged as well as world-acknowledged expert on promotion and marketing. And I say that with understanding that you have to have something to promote and market. You can't just we're the best and not be the best. You have to bring something to the table. And so we have a plan. This is why these DATs are failing, by the way. They come out the gate, they got a bunch of hype, which is all gone now. Boom, stock blew up, they hit the ATM, they piped it, diluted the investor, then they hit the ATM because the stock went up. The problem is 3 months from now, bro, you're like, who's the hype man? What's the story? And if you have no product, you have no hype. If you know what I'm saying? You can't just keep going to the bank, borrowing money, say we borrowed more money. That's not a hype story. And so with real estate, what we would do, we already have a plan. Every 60 to 90 days, we would be releasing a new purchase, a new investment, a new takeover, a refinance capability. Imagine I pay cash for $600 million of real estate, which we did last year. At any time, I can go to Fannie Mae and Freddie Mac and get $400 million. 5% debt today. It'll be probably 3.5% in the next year. That real estate, because it cash flows, provides tremendous debt sources. So I could go back to Fannie Mae and say, I want to borrow $400 against my $600 million purchase last year. They'll write me a check for $400, put it on collateralize it with the real estate, and I could buy $400 million worth of Bitcoin that day out of tax-free money. Mm. And then every month, as I build the portfolio, continue to buy Bitcoin from the cash flow. As the rents go up, every month the rents are going to go up, probably an average of $25 over time. $25 times 15,000, that's new money.
Okay, so that's the plan. Yeah, look, I understand what you're saying with these digital treasury companies. And look, there was a point, Grant, where that was the only way for some people to buy these assets because they couldn't own the outright crypto. But now with all the TradFi getting into it, there's other ways to own this crypto.
Yeah, that's right.
Yeah. Look, I hope it all doesn't end so bad, but it doesn't look very good for those right now.
Yeah. And then also on that point is that the reason I think this works so well is that a majority of the pension funds and institutions, as you know, in this country have a mandate to invest in real estate because it's a stable, safe product, a safe investment, been proven for years. But they don't have a mandate to buy Bitcoin, but they would like access to the Bitcoin.
To continue watching the rest of the episode for free,
visit our website londonreal.tv or click the link in the description below.